Hold on to your crypto wallets. Folks, Bitcoin is teetering on the edge of its lowest price point since June, while a staggering $1.4 billion in trader positions get wiped out in a brutal altcoin liquidation spree. It's a wild ride in the digital asset world right now, and if you're just dipping your toes into this volatile market, you're about to learn why even seasoned investors are feeling the heat. But here's where it gets controversial. Is this dollar-driven downturn a temporary blip, or a sign that crypto's glory days are fading? Stick around, because we're about to dive deep into the details, uncovering insights that might just surprise you. The crypto landscape took a nosedive on Tuesday, propelled by a surging US dollar and market whispers of a slower pace for Federal Reserve interest rate reductions. This combo ignited a widespread sell-off, pushing Bitcoin, BTC, to around $104,723.54. Check the latest at https://www.coindesk.com/price/Bitcoin. Dangerously close to its June nadir, and Ethereum, ETH, to about $3,576.48. See https://www.coindesk.com/price/Ethereum, flirting with levels not seen since August. For beginners, think of it like this. When the US dollar strengthens, it often makes riskier assets like cryptocurrencies less appealing, as investors flock to safer harbors. And this isn't just a minor dip. The selling frenzy triggered approximately $1.4 billion in liquidations across derivatives exchanges. To put that in simple terms, liquidations happen when traders borrow money to amplify their bets, but if prices swing against them, exchanges automatically sell off their positions to cover debts, leading to a cascade of forced sales that can tank markets even further. Interestingly, these exchanges are actually holding up better than during October's chaos, when Binance's system unleashed havoc by closing out countless positions in a flash. Story continues below. At the heart of this turmoil is the dollar's renewed vigor, with the DXY index, a measure of the green box strength against other major currencies, hitting 100 for the first time since July after climbing from a September low of 96.2. Analysts are pointing to expectations that the Fed might ease up on its rate-cutting schedule, which typically boosts the dollar while dragging down risk-on assets like Bitcoin and the broader crypto ecosystem. It's a classic case of macroeconomic forces rippling through the digital realm, and this bearish shift is making waves in everything from stocks to cryptos. But this is the part most people miss. How much longer can we rely on traditional economic indicators to predict crypto's wild swings, especially when decentralized assets were built to operate outside the system? Diving into derivatives positioning. By Omkar Godbol. Let's talk derivatives, those sophisticated financial instruments that let traders bet on future price moves without holding the actual assets. Right now, Volmexer's Bitcoin Volatility Index, BVIV, which gauges the expected turbulence in Bitcoin prices over the next 30 days, is on the rise after its 50- and 200-day moving averages crossed in a bullish signal. Though that might sound contradictory, it's actually signaling potential choppy waters ahead. Over the past year, BTC's spot price has shown a negative correlation with volatility, meaning as volatility spikes, prices often weaken. This could spell more downside pressure if BVIV keeps climbing, a dynamic worth watching for anyone trying to time their trades. Meanwhile, on the Zcash, ZEC, front, open interest, essentially the total value of outstanding derivatives contracts, is hovering near all-time highs of about 1.59 million ZEC. Yet, funding rates have turned bearish, indicating some traders are betting against the price by shorting futures while possibly holding long positions in the spot market. It's a hedge that could pay off if ZEC dips further. Shifting to exchanges like CME, Bitcoin, and Ethereum futures are showing divergent paths. Ethereum's open interest stays near record peaks, drawing in the action, while Bitcoin's is more subdued. Over on Deribit, Bitcoin options reveal a clear bias toward puts, bets on price drops, across all expirations, reflecting widespread fear of more declines. Ethereum options, however, a tilting bullish after the February 2026 expiry. And in the over-the-counter, OTC, space via paradigm, there's notable interest in November 7th Ether puts at the $3,500 strike, a move that suggests traders are positioning for Ether to fall below that key level. For newcomers, options are like insurance policies on prices. Puts protect against or profit from drops, while calls do the opposite for rises. Token torque. By Oliver Knight. The altcoin scene endured a punishing session in Asia trading hours, with numerous tokens crashing over 15% and sparking a $1.37 billion liquidation wave, as tracked by CoinGlass. https://www.coinglass.com/liquidation data. Leading the charge was Aster, a competitor to Hyperliquid, dropping 18% to around $0.8476. View at https://www.coindesk.com/price/Aster. Ironically landing below the 90 cents price the Binance founder CZ paid for a $1.8 million haul just over the weekend. CZ himself tweeted on X, formerly Twitter, at https://x.com/CZ_status/1985623248265232546, lamenting, "Every time I buy coins, I get stuck in a losing position, 100% record," which adds a human, relatable touch to the high-stakes drama. Several other coins, like XRP at $2.3277, check https://www.coindesk.com/price/XRP, are back testing crucial support levels that sparked a rebound 2 weeks ago, though heavy hitters such as Solana, SOL, at $165.03. See https://www.coindesk.com/price/Solana, and Binance Coin, BNB, at $963.33. Visit https://www.coindesk.com/price/Binance-Coin, are sinking to new all-time lows in this cycle. But not everything is doom and gloom. Privacy focus coins are bucking the trend, with Monero, XMR, at $345.14, https://www.coindesk.com/price/Monero, and Zcash, ZEC, at $409.59, https://www.coindesk.com/price/Zcash, both posting gains for the month. It's almost like a mini-sector rally within the broader sell-off, highlighting how themes like anonymity can thrive even in turbulent times. Tuesday also brought standout performances from Dino Coins Decred, DCR, at $44.38, https://www.coindesk.com/price/Decred, and Dash at $133.35, https://www.coindesk.com/price/Dash. Veterans launched in 2017 and 2014, respectively, both boasting privacy features and seemingly benefiting from the momentum of XMR and ZEC. Decred surged 146% on hefty volume, while Dash climbed 65%, suggesting traders might be shifting funds from the faltering market into these under-the-radar gems. For context, Dino coins are older tokens that some dismiss as outdated, but their recent pops could be a sign of rotating interest toward fundamentals over hype. More for you. Alting, stablecoin infrastructure for the future. October 16, 2025. Stablecoin payment volumes have exploded to $19.4 billion year-to-date in 2025, and Alting is stepping up to capture this booming opportunity by building cutting-edge payment infrastructure that handles transactions in mere seconds at a fraction of a cent. Imagine seamless, low-cost transfers for everyday use. That's the vision here. View full report. https://www.coindesk.com/research/alting-stablecoin-